Today, we will discover how to spot setups quickly. We will be observing the price action in detail for momentum trading. Furthermore, we will improve our trading skills to achieve pro trader level. If you are ready, let's go. Today, let's talk about how we can tell when the market conditions are changing and how we can adjust to them in a smarter way. As you know, price always gravitates toward liquidity, especially institutional liquidity that it wants to sweep, like the previous week's high or day's high. So when you see clear targets and strong bullish structures like multiple imbalances, demand order blocks, or support to resistance flips, you start forming your trade ideas. You are looking to take a clean, compact, long trade right here, and it is the right idea. And if you are in a hurry, you might even place a limit order just like this one. And honestly, this setup is a valid and solid, and there's nothing wrong with taking this trade. But somehow you still get stopped out. The setup just doesn't play out. And that's when you need to pause and ask yourself a few questions. Is the structures failing or not? Do we have a new direction forming and maybe a closer target here? Where is the nearest liquidity that might actually matter right now? Because in this example, you will notice these bullish structures aren't holding up really well and they are getting broken. And this is the moment where we need to accept that the direction has shifted. Price is now hunting a completely different pocket of liquidity. So when you start seeing multiple bearish imbalance zones forming, along with the failed bullish structures, you can flip your idea and look for trades in the opposite direction. And there's absolutely nothing wrong with doing that. Actually, this is what happened with Bitcoin this week. Price hit these weekly and daily high liquidity levels sitting above, and we also had last week's low sitting below. But I was mostly focused on those upper targets and kept thinking about taking a long trade. We had a bunch of strong bullish structures forming. First of all, this inner liquidity got swept. Price then pulled down into this multi-imbalance area where that deep order block was sitting. So if you placed a limit order somewhere around that zone and just left the charts alone to go to do something else, it honestly wouldn't have been a bad idea at all. In my opinion, this was actually a really solid setup. But sometimes the quality of your setups doesn't matter at all because the market can crash out of nowhere suddenly. If you look closely here, what happened is that price changed direction for much closer target now, which was the last week's low acting as the main liquidity for us. And our multi-imbalance area with that demand order block completely failed to hold the bullish movements. After that, the rest of the price action was basically just simple multi-imbalances, move aiming to take out the previous week's low. So the whole point of today's lesson is that when bullish or bearish structure starts to fail, it usually means we are shifting our bias and the market is heading towards a new pool of liquidity. Okay folks, have a great and nice day. Remember to manage your risks. See you in the next video. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.